Did you know that a simple 3-digit number can influence your financial future in ways you might not expect? Your credit score can affect everything from your ability to buy a home to how much you pay for car insurance. But here's the kicker. Many people don't fully understand how their credit score works or why it's so important. In today's video, we're diving into the world of credit scores, what they are, why they matter, and how they can shape your financial life. Whether you're looking to buy your first home, apply for a loan, or simply want to improve your financial health, understanding your credit score is a crucial step. By the end of this video, you'll know exactly how credit scores are calculated, how to improve yours, and how to avoid common mistakes that could hurt your score. Before we get started, make sure to hit that subscribe button so you never miss out on helpful financial tips that can help you make smarter decisions with your money. Understanding the basics. So, what exactly is a credit score? At its core, a credit score is a numerical representation of your creditworthiness. Lenders, insurers, and even potential employers use it to gauge how likely you are to repay borrowed money. The higher your score, the more trust you build with creditors and lenders, which can lead to better loan terms and lower interest rates. Credit scores typically range from 300 to 850. Here's a breakdown of what those numbers mean. 300 to 579. Poor credit. This can make it tough to qualify for loans or credit cards. 580 to 669. Fair credit. You may still qualify for credit, but interest rates will likely be higher. 670 to 739. Good credit. You're considered a reliable borrower and can get favorable loan terms. 740 to 799. Very good credit. Lenders trust you and you'll likely qualify for the best rates. 800 to 850. Excellent credit. You're a low-risk borrower and can get the best rates available. Now, how is your score calculated? It's based on 5 key factors. Payment history, 35%. Do you pay your bills on time? Late payments hurt your score. Credit utilization, 30%. How much of your available credit are you using? Lower is better. Length of credit history, 15%. The longer your history, the better. Types of credit used, 10%. A mix of credit cards, mortgages, and loans is a plus. Recent credit inquiries, 10%. Too many hard inquiries can hurt your score. It's a delicate balance. A single missed payment or using too much of your available credit can send your score tumbling. But on the flip side, responsible habits like paying on time and keeping credit usage low can help you climb the credit score ladder. Common myths and misconceptions. There are a lot of myths floating around about credit scores, so let's set the record straight. Myth number 1. Checking your own credit score hurts it. Fact. This is a big misconception. When you check your own score, it's considered a soft inquiry, which does not impact your credit at all. It's important to regularly check your score to stay informed and catch any issues early. Myth number 2. Closing old accounts will boost your score. Fact. Closing accounts can actually hurt your credit score. Why? Because it reduces your available credit, which can increase your credit utilization ratio. Plus, it shortens your credit history, which accounts for 15% of your score. Keep those old accounts open if you can. Myth number 3. You need a credit card to build a credit score. Fact. While having a credit card can help, it's not the only way to build credit. There are other options like secured loans or becoming an authorized user on someone else's account. What matters is how responsibly you manage any credit you do have. Myth number 4. Your credit score is the same everywhere. Fact. So you might see slight variations in your score depending on the service. The most commonly used score is the FICO score, but other models like Vantage Score can be used as well. How to apply this knowledge? Now that you have a better understanding of credit scores, how can you apply this knowledge to improve your financial situation? Let's break it down into actionable steps. Pay your bills on time. The most significant factor affecting your credit score is your payment history. Make it a habit to pay your bills on time. whether that's your credit card, mortgage, or even utilities. Set up reminders or automate payments to avoid missing deadlines. Keep your credit utilization low. Aim to use less than 30% of your available credit. For example, if you have a credit card with a $1,000 limit, try to keep your balance under $300. This shows creditors that you're not overly reliant on credit. Check your credit report regularly. It's essential to check your credit report at least once a year to ensure there are no errors or fraudulent activity. You can get a free report from each of the 3 credit bureaus, Equifax, Experian, and TransUnion, once a year at annualcreditreport.com. Diversify your credit mix. If you only have one type of credit, such as a credit card, consider adding another type, like a small loan or an installment plan. Having a mix of credit can boost your score over time. Don't open too many new accounts at once. Every time you apply for credit, it triggers a hard inquiry, which can lower your score temporarily. Only apply for credit when necessary and avoid opening multiple accounts in a short period. These steps may take time to show results, but with consistent effort, you'll see your credit score improve. For instance, Sarah, a viewer like you, started paying off her credit card balances and checking her credit regularly. Within 6 months, her score jumped from 620 to 700, unlocking lower interest rates on loans. Advanced tips and strategies. If you're already on top of the basics and want to take your credit score to the next level, here are a few advanced strategies. Consider a credit builder loan. These small loans are designed to help people build credit. You borrow a small amount, but the lender holds the money in a savings account until you repay it. As you make payments, your credit score improves. Use a credit card with rewards wisely. If you have good credit, consider getting a rewards card. If you pay off your balance each month, you can earn cash back or points without paying interest. Just be sure to avoid overspending. Negotiate with creditors. If you have late payments or other negative marks on your report, try contacting the creditor and asking for a goodwill removal or a payment arrangement. It doesn't always work, but it's worth asking. Become an authorized user. If a family member or friend has a high credit score and responsible credit habits, ask if you can be added as an authorized user on their credit card. This can help boost your score without having to open a new account. Look into credit repair services cautiously. If your credit is in really bad shape, credit repair services may offer assistance. But be careful. There are plenty of scams out there. Research any service thoroughly before committing. By using these advanced tips, you can accelerate the improvement of your credit score and unlock even better financial opportunities. To sum it all up, your credit score is a vital part of your financial life. It affects everything from your ability to get a loan to how much you'll pay in interest. By understanding the basics, debunking myths, and applying actionable tips, you're well on your way to improving your credit score. Remember, pay your bills on time. Keep credit utilization low. Check your credit report regularly. Use your credit responsibly. If you start applying these strategies today, you'll be setting yourself up for financial success tomorrow. Don't forget to like this video if you found the tips helpful, and subscribe to the channel for more in-depth financial advice that can help you take control of your money. Take action today, because your credit score is in your hands.